Hello guys, and welcome to our channel Trading Smart. So today we'll be talking about the double candlestick patterns and how you can use them in intraday trading. I guess that you guys know what is candlestick and how you use candlestick during your tradings, right? So I'll leave the basics. I'll directly go how you can use these two types of candlestick pattern for a profitable intraday trading. Okay, and I'll be using moving average, simple moving or exponential moving average to give a boost in our trading so that we are at least 95% sure on our trades. Okay, so let's get started. So before starting, whoever is listening to me for the first time and have came to our channel for the first time, I'll request you guys go and subscribe to the channel, and the bell icon is there. Please click that bell icon so whenever we'll be loading a new video, you'll get a notification. Alright, so I'm making this video in English so that the people who only understand English can also get benefit from this video. Today is your 3rd May and अभी मार्केट क्लोज हो चुका है. तो चलिए शुरू करते हैं. मैंने 4 स्क्रिप्ट्स लेकर के रखे हैं. एक हो गया आपका पावर ग्रिड, उसके बाद DLF, येस बैंक एंड हेवल्स. तो पहले बात करते हैं कैंडलस्टिक पैटर्न की. तो हम लोग जो आज यहाँ पे यूज करने वाले हैं वो हो गया, एक हो गया आपका बियरिश एनगल्फिंग एंड दूसरा हो गया बुलिश एनगल्फिंग. तो bearish engulfing और bullish engulfing क्या है, I'll tell you in this video. Okay, so stay tuned and watch the video till end. So before starting anything, first we'll be using here exponential moving average, because simple moving average do give us a clear picture, but it do lacks. Why it lacks? Because it doesn't give proper weightage to each of the candles that form newly. So we'll be using exponential moving average so that for an intraday, because in intraday you need to find out the change or the reversal of the trend in an instant. Alright, so exponential moving average would give you the advantage to select that trend or that uptrend or that reversal. So we'll be using exponential moving average. So first, as I always tell you guys, use 2 moving average. First should be more, that is 20 we have given, and the another we'll be using is period 10, and I'll change the color so that you can see it properly. So this is 10 and 20. So if you guys have not watched my prior videos on moving average and using of Renko chart, in that I have explained that the golden rule of using 2 moving average is whenever your lower moving average is crossing over your higher moving average, here you can see this has happened here. At that point you should buy that stock. That time we are using Renko chart, but today we won't use any chart. We'll use only exponential moving average and our bearish engulfing and bullish engulfing chart pattern techniques. Okay, so this is good for beginners who are learning basic of candlestick. It will give you an idea how candlestick works, like what is the percentage of risk that you can take when you are using candlestick, and when using with technical indicators like moving average, MACD or RSI, how much profit you can earn from that trade. Okay, so it will give you a clear picture. Here, as I have given you, as you can see, here is the point where you can take the trade, right? So but as an intraday trader, this is today May 3, this is 9:15 candle, correct? So when, if the morning you would have come by 9:15 and you would have put this exponential moving average chart here, this would have already crossed over the 10 EMA, would have already crossed over the 20 EMA. So how do you know when to enter? So the first position you already know, because this is creating before this. So you can take a position here, you can buy the stock here, and it would have gone up to here or maybe till here. So it's depend on your risk appetite, how much risk you are able or you are agree to take. Okay, so it depends on the person. Now we'll talk about bearish engulfing. So what is bearish engulfing? Bearish engulfing is something when we'll say this, the green one will say as a P1 candle and the red one will talk as a P2 candle. Okay, so when the P2 candle will have the body part, you can see, is more than the P1 candle, and the trend before this P1 candle is an uptrend, then it will call a bearish engulf. What it means is it show a clear indication that bears are now more stronger in the market and the market is more likely to go downtrend. So you can see if I do a circle here, so like a circle here, if I do, the only thing you should remember is that the P2 candle should completely engulf the P1 candle. Here you can see the P1 candle body is totally engulfed by P2 candle. The shadows are okay. If the shadows are not engulfed by the P2 candle, then it is fine, but the body should be completely engulfed by P2 candle. Okay, alright, so you can see here, and the next candle you can see is created below the P2 candle and which is also red. So this clearly gives us an indication that market is going to be on downtrend side. So you can see here the market have gone down the whole day. If you take, the market have gone down up to 210 points. The like only one trade you have taken for the whole day, then this could have been enough for you. And remember, you always need to put your stop loss on the high of the P2, like whichever is higher, you should put your stop loss here, because if the prices like this, the green one have came but it did not touch here, so your stop loss would have been hit. So I am not telling that it will not hit, but this is a clear pattern that you can sell the stock here, and within one trade you could have get a profit till up to 210 if you have hold the stock for the day. Okay, so now here, if I would have been totally dependent on the exponential my indicators, it have given me a sell signal, but at the time of it was like 11:55. You can see here also the same thing happened. The pattern have come here as well. I'll show you the pattern here as well. You can see the pattern here. The P1, if I tell the P1, that is the green one, is totally engulfed by the P2, the red candle, and the next is also red candle. So this gives a clear indication that the market is going to a downfall and you can sell the stock at that very moment. Fine. So let's go to DLF. I'll show you here as well. So in DLF, first I'll just speed up the process and I'll come back. Alright, so I have given the I have taken the two exponential moving average, same 10 and 20. You can see the red one is 10 and the blue one is the blue one is 10 and the red one is 20. So now this is 9:15 your candle of DLF, right? So now we'll see, as per our indicators, we have a sell signal around 11:10, right? But I'll show you how you can get a sell signal before that, because as I already mentioned, these indicators will give you the direction after it occurs, not exactly when it occurs. So you should use your idea of candlestick. You should study candlestick, then you can get an idea like how and when get into a benefited trade. Now again, here you can see the green one, as I have said, P1, and the red one P2. The P2 have engulfed half of the candle of P1, but not full. But if you see the P2 shadow, if it have engulfed and got more down than the P1. So it gives us a positive thought, but not surety that you can get into that trade. So we'll wait for the next one. So this is the sign. We'll wait for the next candle, and as you can see, it has engulfed the whole candle of P1. If you consider P2 and the next P3 in red, these two have collectively totally engulfed the green, that is P1 candle. So then you can see the next, it will fall down for the whole day up to 187.31. So see, this is the power of candlestick chart. So if you know how to read a candlestick, it is very much great. And as I have already mentioned, remember to put your stop loss around here. Here it should be your stop loss. If it have been hit, you should have move out of that trade. So risk is there. Risk is always there in trading. But if you want a profit, always you have to take calculated risk. And it is very much important that you know how to manage your cash. Okay, so here is the sign of total. You can sell the stock. As you can see, it did go up, but again it had fall down to 187 point something. So here are the candlesticks. This is called bearish engulfing, and on my next video, part 2, I'll be showing you the bullish engulfing, how the bullish engulfing happens in candlestick market. Fine. So thank you for watching. Do share, subscribe to our channel for more videos, and I'll be bringing you guys more ideas on intraday trading. So see you guys on my next video. Till then, bye bye. Take care.